The US dollar was mostly sideways last week, but we have some event risk next week that could push the markets out of their comfort zone. So we'll have the details on that in today's weekly forecast. We're going to talk about the DXY, the EURUSD, the pound USD, the dollar versus the Swiss franc, and also gold. All right, so let's dive into this. I'm still getting over COVID, guys. It's kind of lingering, so hopefully you all can hear me okay. All right, so looking at the DXY, the market is still holding below these lows, or I'm sorry, these highs back here, right around 104.50. So this is the area that we've talked about for weeks, where you can see back here, this is our pivot for the DXY, right up here around 104.45. And you can also see we've got the highs up here around 104.20. So as of right now, this is going to be the key resistance area for the DXY, and we have support down here at these highs between 103.50 and 103.8. So really, we can summarize this as a range-bound market for now, going into that US CPI on Tuesday, with the DXY between this area down here around 103.50 and the area up here around 104.50. So it's going to take a sustained break above 104.45, this area up here, in order to flip the DXY bullish toward 105. And alternatively, if we saw the DXY trading back down here on a daily closing basis below 103.5, then that would be bearish toward levels like 103 and 102.60. All right, so it is going to take a sustained break above either 104.5 or below 103.5 to really break the DXY out. Now, I'm not a fundamental trader, guys. I trade 100% technicals. However, I can tell you without a shadow of a doubt that risk assets are looking for a lower CPI on Tuesday. So that US CPI, if it comes in hotter than forecast, okay, so higher than forecast, that is going to be bearish for risk assets and bullish for the US dollar. Because right now, risk assets, specifically stocks, are looking for inflation to come down this year. Because if it doesn't, the Fed is going to be a lot more hesitant about cutting rates, which stocks are not going to like. All right, so again, if CPI comes in hotter than forecast, that would be bullish for the DXY. If it comes in lower, then that would most likely be bearish for the dollar. Next up, let's take a look at the EURUSD, which was mostly sideways last week. We did get a little bounce here from this support area that we've talked about. So you can see 1.0755. This was the key level that I've talked about for weeks. You can see we have to close below it right here on this candle, the close back above, and now it has flipped to support. Now, you can also see we're off of this closing price back here. We've got this low and the low from last week. So right now, this area down here between 1.0728 and 1.0755 or so, that's going to be the support area for the EURUSD, with resistance coming in up here at these lows around 1.082. Now, I do want to show you one trend line, though, that is very interesting for this market. So if we go to the weekly time frame and look back here at this low, all right, so I'm going to snap the trend line right there to this low from back here. And if we move in here, I'm going to fine tune this on the daily time frame. But if you'll notice here, we've got all these lows from last year. Okay, so this level, there are a couple of placements for this. Now, I always opt for a more conservative placement. And what I mean by that is instead of placing the level down here, okay, right off of these lows from back here in 2023, I like to move it a little bit higher to include these lows back here. Now, even if you draw it here, though, notice where the EURUSD struggled last week. Okay, right here at resistance, right at that trend line. Now, if you draw it a little bit higher, though, which is what I prefer, because this gives you a more conservative placement. So up here to include, we've got the closing price right here, this daily close, we've got this low, we've got these two lows, and also this wick. Okay, so if you use that, you can see where this did break down through here. All right, it acted as support here on this candle. We got the breakdown, and resistance, once again, comes in right there at those lows around 1.082. So I think this is going to be one to watch as we head into Tuesday's CPI. If we do get the euro rallying into CPI, then that could be something to watch. This trend line here off of that low from back here in 2022. All right, so clearly this area through here respects that trend line. And you can see where, once again, the EURUSD is trading below that right now. So I do think you have to be careful getting too bullish on the euro while it's below 1.082. Now, if it were to reclaim this, all right, reclaim this level on the daily time frame up here, then that, of course, would be bullish for the euro. All right, same thing with the DXY and 103.5. If the DXY were to get below 103.5 and the euro gets above 1.082, then that would be bullish for the euro back here toward these highs right around 1.089. But as of right now, again, this is going to be critical resistance for the euro. Next up, we have the pound, which I still love the technicals here. You can see that we do have a large ascending channel from back here off of these highs and lows, we also have this descending channel where the pound started to carve lower highs and lower lows ever since last year. So this up here, like I mentioned recently, this up here was one big rounded retest of this failed level. Okay, so we got the breakdown through here, rounded retest, and so far this area is serving as resistance. Now, we recently saw the first lower low for the pound following the break below 1.26. Okay, so this right here was the first lower low for the pound ever since back here in September of last year. Now, the question though is that material for this market? Because you can see where the pound reclaimed 1.26 last week. However, like the euro, like the DXY, I mean, the market really didn't go anywhere, right? It reclaimed this level, but it didn't really move higher to show us any kind of significant strength. Okay, so for next week, what I'm looking for is, and this kind of goes in line with what we've seen from, the DXY and the euro, with the euro 1.082, right? If we see the pound move up here toward this area around 1.27, that's going to be resistance here for this market. Notice how we have this trend line off of these lows, which, by the way, this level right here runs parallel to the bottom of that channel that we just looked at, okay? And markets love symmetry. So this area around 1.27 is going to be the resistance area to watch for the pound. Now, if CPI comes in hotter than forecast, we may not even see a retest up here. And instead, we may see the pound just close right back below these lows back here. Okay, so it's unclear how significant this level is here, but I do think 1.27 is the area to watch here for the pound. And I will be looking for shorts up here, guys, if we do see a retest. Of course, it kind of depends on what we're seeing from other markets, especially with the DXY. All right, next up, let's take a look here at the dollar versus the Swiss franc. And this is a really interesting market that I've talked about for weeks, where you can see that back here, last year, we got a fake out above these highs. Okay, so we got the move above this, we got the close back below. You can even see where we got a retest through here as new resistance, and also here on the breakdown. All right, so fake outs like this, guys, I love to trade away from these fake outs. So in this case, the fake out was above these highs, so you trade away from the fake out. Same thing down here. We got the fake out below those July lows, the reclaim through here, retest as new support, so you trade away from the fake out. All right, and I've talked about this market too, ever since it was back here, talking about the bullish potential, right? Even before we got the reclaim, I was saying to watch for a reclaim here for a move higher, and so far that's what we've had. Now, the franc has been really weak, guys, against the dollar, because even though the DXY was pulling back, we actually saw this market move higher on days like this here. All right, so a really nice move here so far from this market, and what you'll notice here on the weekly time frame, this is what we've been waiting for, because this area, these lows back here around 0.869, this was a weekly level that you can see held up through these recent candles. Okay, so here, resistance, and last week closed above. So any retest down here in this area is going to serve as support now for the dollar Swiss franc. Now, the next key area is going to be up here around 0.882, right? These highs back here, and above that we have 0.89. So these lows from back here last year. All right, so on the weekly chart, guys, I do like the idea of looking for buys on pullbacks around 869, because that is the key weekly level that we've been waiting for a close above, which we got last week. All right, so all in all, you combine the fake out that we saw here recently. All right, so this reclaim back here, the reclaim above this key level from those July lows, this right here was bullish. We also got the break above this trend line that I've also talked about recently. Okay, so we had the break above this. Now we've also had a weekly close above this key weekly level around a 0.869. All right, so again, just be careful with US CPI on Tuesday, but I do like the idea of looking for buys on pullbacks here, as long as the market can stay above this key level on a weekly closing basis. All right, so let's wrap up with gold here, XAUUSD, which we've talked about this consolidation last week. And what I was looking for was a breakdown of this trend line here for a move down toward 2000. All right, so these recent lows through here, and also potentially 1975. Now, the reason I was looking for shorts up here, and we talked about this at length, is if you go out here toward the 5-day, notice how this market has been range bound ever since back here in 2020. Okay, so like I've said recently, this up here, these highs up here, this is not where I want to be looking for longs. This is where I want to be looking for shorts. And that's simply because while below this area up here, this is simply a range bound market. Okay, yes, we could eventually get the break higher, but until that time comes, I'm looking for shorts at resistance. All right, so if we move in here toward the daily time frame, you can see where we did get potentially a break below on Friday. However, you've got to be a little bit careful with Friday breaks because of the lack of volume. And so this is a case right now where I'm going to wait for the first part of this week, especially with that CPI coming up on Tuesday. I'm going to wait to see where gold closes on Monday, because if it closes back up here, then obviously that tells us that the market didn't quite break this trend line, right? So it was a very marginal breakdown. So again, this is not a case where I'm going to say that gold has broken down and it's going to move lower next week. I want to see early next week, see what kind of price action we get here to see if this is going to be a confirmed breakdown, or if, this level could be drawn a little bit lower and Friday's session didn't quite break that level. Okay, so again, nothing really too convincing yet, but it does look relatively weak there at that trendline support. And I do still think that, again, as long as gold is below this area up here around 2080, I like the idea of a pullback down here toward levels like 2K, 1975, and potentially even this area around 1930. Now, if gold still is contained within this symmetrical triangle here next week, then keep an eye on the trendline resistance up here. Okay, so right around 2050, 2060, especially as we head into Tuesday's CPI. I hope today's video has helped you trade these markets going into next week. Be sure to subscribe to the channel and click that bell icon for notifications. And don't forget to claim your 70% off VIP access for real-time discussions on all of these markets, plus the stock market and also crypto. See the link here in the description on YouTube, or if you're on the website, click on that trading group link and it will take you right to the page. Have a great weekend. I will talk to you again on Monday.